Good day. It's Thursday, July the 15th. I'm Martin Gago with Market Radius Research. We've got Dave MacMillan, CEO of Deveron. Deveron's an Agtech company that collects, analyzes, and interprets farm data to improve farm yield, quality, and farm profitability. The company is consolidating the North American market to create scale and provide big data opportunities. We've got two parts to this webinar. Firstly, Dave will be giving an overview presentation, and then we'll be discussing the business, and then we'll be taking questions from the audience. Dave, thanks for coming. And I'd just like to say, so I hear people ask me, why do you have X, Y, or Z company on? So the reason we've got a Deveron on the call today is, firstly, I like the ad tech space, huge opportunities therein. I've known Dave for several years now from when he was first starting this, and I like him, and I really like the moves that the company sort of pivoted from being just sort of drone focused or drone only, and now being a more service provider to the farm industry. And they've also assembled a really solid board of directors. I'm quite impressed with who they've got on their team there. So I just want to highlight, this is not a recommendation or investment advice. We're here to learn about the company, do your due diligence, invest cautiously, and in the venture markets, only invest what you can afford to lose. And remember, always diversify. Dave, thanks for taking the time, and how are you doing?
Good. Thanks for having me on, Martin. Good to see you again. It has been some time since we first met, and both of us have changed a little bit of what we're up to these days.
Yeah, very true. Very true. So yeah, why don't you go through the pitch, and I'll interrupt you as we go along and try not to be too annoying.
Yeah, you bet. Feel free to jump in wherever it makes sense. So yeah, I mean, I think Martin's description of who we are is really perfect. And, Deveron's an agriculture technology company that trades on the TSX Venture under the ticker FARM. And we really do two main things as we try to figure out how to get more and more farmers in North America using data to drive decision making. So the first is we've got a national network of data collection technicians that are actually going out to farms and collecting various types of data that historically has been very expensive for people to collect. And on that side, we're creating really interesting opportunities to drive economies of scale on the cost of collection, which is allowing more people to access this type of information that has really been difficult to collect in some sort of standardized and scale way. And then from that, the more and more data we've been collecting, we realize there's so much opportunity to help farmers basically manage their input costs better, increase farm yields using all of this information. So we have a customer platform called Farmdog, where we basically process all of this data, and we provide analytical information around best practices for fertilizer, for crop protection, for seed. So it's kind of really morphed into this digital ecosystem, technology company that has like a world-class service offering underneath. And like characteristic of agriculture is still people like to have a handshake. So we really believe that for a technology company to be successful, you have to have significant scale of boots on the ground, people that are going to the farm gate. And traditionally the sector has not really wanted to invest in that area because it can be expensive, but we really believe that's where we're winning customers, and it's where the first tangible conversation around what can you do with this data starts to happen, and then you can move people onto the cloud where we provide a lot of our after collection analysis. So I'll put through the presentation today, and again, Martin, feel free to jump in wherever you like. But before I start, I'll just go over a couple highlights. So over the last couple of years, we've had compounded annual revenue growth of 140%. We raised $6 million in December. 30% of that was participated in by our board chairman and his technology investment group. So nice strategic participation. As typical of agriculture in general, it's quite sticky once you get the customer. We have a really high retention rate, which leads to this kind of reoccurring revenue business model that we have. And over time, we've really morphed the business. As you mentioned, when we first met, we were doing a lot of like drone data surveying for farmers. So now we're more in the what to do with like a variety of agronomic data that gets created on the farm. And you can see that in our financials over the last bunch of quarters. There's a strong growth on the higher margin digital insight side of things. There's this amazing opportunity, which we really think is transformational, to consolidate the local kind of crop consultant market. So these are traditionally the people that are advising farmers on, what decisions to make. They're completely unbiased. They don't sell inputs. There just hasn't really been a single shingle for these groups to sort of operate under. So in the last 5 months, we've acquired 4 businesses that sort of focus on the ag analytics space. And we really think that there's a great opportunity here, much like we've seen in other sectors, whether it be a well health on the healthcare side or Boyd Auto Services on the collision repair side. And lastly, I think the other really interesting piece of blue skies for our business is around carbon sequestration. Some of your listeners may be familiar with what's going on in the carbon credit space, but agriculture offers a really significant place for credits to be created. And so we're helping farmers basically collect the data that's needed to build carbon credits. We're building a system that provides auditability and eventually transferability of the Canadian or American farmer creating a carbon credit and then being able to sell it to eventually a large company that's looking for some form of carbon write-off. So when we wake up in the morning, we think about really one thing, and that's collecting and organizing the world's agricultural data. Today we do that from a lens of North America, but much of this industry is somewhat standardized, and wherever they go, corn or soybean, a lot of our services and products can be put on farms. So although we're focused probably here for the next 2 years, there are high synergies into other markets where large production agriculture happens. So I'll just kind of go through what does this data collection mean, and I think providing this coverage map allows you to think about Deveron's really building a one vendor solution for companies that are looking for data to be collected across many geographical markets in the same way. So we're providing standardization. We're also providing economies of scale. As you can imagine, complicated projects across many regions, or even within Saskatchewan, you have large geographies you need to cover. We have technicians that are purely focused on collecting data, whereas the traditional landscape in agriculture might be you have an agronomist who sells fertilizer. They may do some data collection in the fall, but they're never really focused on it. So it leads to bad turnaround time for customers. It also leads to agronomists doing things that aren't really the best use of their time. So as we started to grow our network, we've really seen everyone from the individual farmer to the crop consultant to large agriculture enterprises are coming to us and saying, I have this need for data, whether it be soil sampling, flying drones, installing weather stations. We'd love to leverage your network that goes really to the last mile. And then, for these companies, especially when they're multi-state or multi-province needs, they just deal with Deveron. They don't have to deal with 15 or 20 different local companies. And I think we're seeing a lot of value for our service offering on that side. And then, as you can imagine, wow, you're collecting all this data. There must be some interesting things that you can do with it. And that's really, I think, where all the upside starts to lay. It's not just this idea of a service company anymore. What we're doing is we're aggregating all of this data into our customer platform, which is called Farmdog. I'll go through that in a couple slides. But it really creates this central ecosystem where data can be managed. From that, we can analyze production data so farmers can understand, I applied 140 tons of fertilizer last year. What was the yield results and was that useful? And then we can actually provide prescriptions. So once you get all of this information organized in one database, you start to be able to recommend in a better way how much fertilizer to use. And this is a really unique and important value proposition for agriculture, because historically that recommendation has been dominated by the input or the chemical or the seed provider. So if you can imagine, whether it be nutrient recommending using less fertilizer because the data says that, it's hard to imagine when 60% of their revenue comes from selling fertilizer. And then on the other side, if you're a seed company, maybe you actually will recommend a little bit less seed because that's the right thing to do to build value for your customer over time. Rarely are you going to recommend a competitor's seed if the data suggests that XYZ seed brand would be better. So we think that by being this independent and unbiased operator and data aggregator, we're really creating that next level of value proposition. That is, we don't sell inputs. All we sell is a recommendation that comes with an ROI. And we think that that's really you just have to believe in transparency being valuable. And in whatever the number of years is, we think that's the way that the landscape in agriculture will unfold.
Dave, could you talk about sort of the market a bit more? There's talk about farmers becoming more I guess in Canada, there's the Richardson family. I believe They own a whole lot of acres out there. And I believe a lot of hedge funds and private equity have consolidated a bunch of farmers in the US, but I don't really, can you talk about, like, does that mean like when you sell to the Richardsons or some big corporate farmer in the US and you get like a multi-state kind of contract? Or can you just talk about some of the kind of farmer dynamics out there? Who are they nowadays?
Yeah, for sure. So definitely, like, farms are getting larger. There has been a lot of consolidation of private equity. And there's different models. There's private equity that's just buying farmland because it's a great asset class, and then they rent it back to that same farmer who, basically farms it for them. There's also private equity that invests alongside operators. So they're providing, better capital so that farmers can expand and get larger, because farming is a scale business too. You really, with the cost of equipment and chemicals and everything, like, they need to get larger to be more profitable. So those are like the two main stages. I think, from a standpoint of like the Richardsons are, and they would be an example of like kind of ag retail. So they're, they're grain traders, but they're also distributors of inputs. And they generally don't own, a ton of land. They really provide, all of the products that is necessary to grow food or corn or beet, like whatever the farmer's doing. And I think, from that standpoint, like that's a bit of the problem in the industry that we see is, again, like the folks that that have a lot of the relationships down to the grower, they're biased to some extent because they profit from selling products that the farmer uses. And where we see like a lot of change happening is within what's called like the crop consultant or agronomy market. So a lot of farmers, large or small, will work with this independent advisor. And it's kind of like maybe even in the financial world, right? Like someone, well, whether wealthy or not so wealthy, you rely on someone to tell you which stocks to buy. Farmers are the same. Like, people are kind of generalists. They have a really good idea of how to farm. They just may not know specifically, what chemical or what fertilizer brand should I be using? How much of it should I be using? They don't stay up to date specifically on that. So they rely on these people to like help provide that educational recommendation. So those are like, for us, that's our main market. We're not actually going direct to grower. We're working with these independent advisors who have big books of business. And we're really building products and services and software that allows them to grow their business. And it's turning into be a really useful model. And we're finding, especially through our ability to buy these crop consultants, we're growing them after we buy them. And so we're participating in all the upside on their P&L as we make them more efficient. So those are, I guess it's a little bit of how we see the world. And I mean, in the US and Canada, they're a little bit different. Like the scale in the US is much larger. The market's about 10 times the size. But, you still generally have probably, I don't know what the specific percentage is, but let's say 60% of agriculture is now dominated by the larger farm. And you might wrap in, private equity owned farmers within that landscape. And then, the family farm is kind of dying. It's harder and harder to make a living as a small operator. And I think you're seeing that consolidation happen, which means technology is going to continue to be readily needed because they're managing more land and there's much more complicated decisions that they're trying to benchmark over time.
Would your platform maybe give the smaller family farm a bit of a leg up where all of a sudden they can leverage a bigger platform to get knowledge from and to sort of better deploy what limited resources they have?
Yeah, and even as a small farmer that you don't have the size to work directly with an independent advisor. There's still certain things that we can provide through our ecosystem, soil sampling, recommendation of fertilizer that works on a field by field basis. So even if you run 500 acres, it's best practices to soil sample and understand what's happening in your system. And it's just the larger the farm, the more like handholding we may have from customer success or account management side. But for the most part, anyone in the world, I mean, yourself included, Martin, could download Farmdog and start logging in observations that you're seeing in your garden. And we kind of see that as like, the better our data systems get, the more empowering we'll be able to help the smaller grower. And then at the same time, for the crop advisor that works with the larger one, making their day a lot more efficient, taking away a lot of the things that they end up doing that's not directly value add for their customer relationship is one of the things we're core really focused on.
with, and I don't know if I'm jumping ahead in the presentation here, just with your business model, are you kind of using local agronomists to sort of use your platform and, I don't know, resell it, but to, like, they pay you a SaaS fee or something like that? Or is it only that you sort of acquire those agronomists to sort of take on their book of business, and then they use your technology platform to do a bigger, better job?
Yeah, so right now we're more interested in the acquisition side, and it's simply because, from a standpoint today of like this of a SaaS revenue model of, if we sell, for a user subscription for $40 a month, and there's 20,000 agronomists, it's not that exciting. Whereas these individual agronomy businesses, they're $1 million to $3 million a year businesses, and like, we really are helping them grow. Like our first acquisition we did last year in Texas, this year they've been able to grow 50% year over year. And that's partly because of this whole like community and ecosystem that we're building. So for us, it's just, I'd rather participate in that upside, and to me, like, really build a shingle that all independent agronomists can start to be a part of. Now, we do have lots of agronomists that we don't own that use Farmdog for their services, and I think over time we'll figure out ways to maybe monetize that system more. But for now, it's kind of like anything we can do to help an agronomist is good. It's just I'm less focused on how do we monetize the individual subscriber versus I really want to buy agronomy businesses in key markets that can help us continue to grow.
All right, and just about the market and the sort of the value and supply chain, can you just talk about the suppliers? You referred to the Richardsons, and I guess there's the input suppliers like the Bayers and the Sygentas who provide the chemicals and the seeds. There are the Deeres, the John Deeres, who provide the equipment, and then there are the Richardsons who have like the retailers, like where you actually the distributors and so forth. And did I get that right? Am I missing anyone? And then you would fit, you don't really compete with any of those guys, or do they view you as, like, would the distributors view you as a bit of a threat because they want to be doing what you do, or?
Maybe, but I don't think they can, because one, these aren't technologically native businesses, right? They've built amazing things doing logistics and infrastructure, but they're predominantly product companies in terms of inputs. They're not service businesses that are looking at digital insights. So I actually view it all as complementary. All you have to believe in agriculture is that eventually the grower is going to have so much information at their fingertips that they won't be a price taker in the fertilizer market, regardless of size or scope. And there's companies like FBN, Farmers Business Network, that has raised $500 million from Google to kind of become like the Amazon of ag retail. So I think the walls of that traditional market are being driven down, and that's leading to data transparency. So if I was someone who sold traditional inputs, I would be looking at digital partners so that I could sell digital, which is far higher margin than fertilizer, and accept that my fertilizer trade may go down a bit, but you're going to grow this amazing, digital product over time. And again, like, why reinvent the wheel? Like, you can license or white label or use a trusted analytical tool that farmers or agronomists use. I mean, it seems like that's the easiest road. So, I mean, maybe it's just as simple of, we're obviously not a gorilla yet, and so you probably walk into the Richardsons and they wouldn't have much fear about, well, where's Deveron going to be today. But I think it's short-sighted. I think data companies are going to eventually, take over agriculture because it's what the consumer wants. And we've seen that in every other industry on earth. And I don't think agriculture is going to be unique to, trends of digitization across the world.
Well, I'd almost think that more so, because there are so many data inputs and variables, and it's not a closed factory system. You're open air, and you need that data and react to it quickly. So.
Yeah, and like, we're building, data science models that are complementary to all. And like, even on, if you're a traditional fertilizer dealer, one of the things that we're learning is, rather than just selling, straight phosphorus, ag retailers that sell fertilizer blends tend to actually do a lot better. Is if you are adding boron or other micronutrients into your fertilizer, they're higher margin. The issue is you need to kind of have soil data to be able to do that well. And so it can be very complementary. And I think it's just about looking at the world in a different way, which is, again, not going to the farm with the idea of I just need to grow this account by 7% this year, I'll sell them some more fertilizer or fungicide. It's about, how can we evaluate all the data that exists in this ecosystem and provide a better product for the customer, who at the end of the day is going to have access to these tools over time. And I think that's where then, for us, we think about, this digital ecosystem that we're building. The Crop Advisor really is a unique place to be, because nobody else can really consolidate them because everyone sells products. So for us being this, independent, unbiased business that's data driven, to have these local guys and gals that have 30 years of customer relationships and trust, and really focus on like driving growth in their business, it works really well. And I think, as Martin, you've been around public markets for a long time, like consolidation stories, I think Canadian investors understand. But what we're trying to do is not just consolidate, like buy and let die. It's buy and build. And I really believe that we're seeing in the early days here an ability to buy these businesses for very real low multiples, and then grow them. And that in itself becomes a very amazing endeavor. Not to mention you have this technology wrapper on top of it, which is all this information that we're getting over time as we expand our network. But even these businesses that we buy today, they're sitting on large historical records of farm advisory work that hasn't been digitized or organized ever before. So every company that we acquire starts to become another unique part of our data lake. So yeah, it's just one of the other things we're, I guess, really focused on, and where we think there's going to be a lot of value over time.
All right, well, let's get back to your presentation. We just kind of veered off here a bit. Thanks.
So yeah, and I think this leads well into this slide. Like, agriculture is a bit complicated, right? It's a pretty diverse industry. It's it's large. I think it's the second largest GDP driver in Canada. It's one of our largest exports for sure. And so, like, to simmer it down, like, I really think about it from a standpoint of benchmarking Deveron's success over acres under management. And we do this in two core ways today. One is through organic growth. Obviously, we've got a sales team in Kansas City, Missouri. You can see that starting to happen. Our Q1 numbers were the last ones we released, and we had 130% top line revenue growth. 68% of it was organic. So I think we're really starting to figure that out. Like, the value proposition is real. Like, groups across agriculture need more and more data collected, and they want recommendations on how to manage their inputs better. And then the other way that we obviously accelerate our acres under management is through acquisition. So we're buying independent crop advisors, and we're also buying soil laboratory companies. So we bought a soil lab in Maine this year, and these are like amazing businesses. They're 50% EBITDA, and we acquired it for 2 times. So I think that's going to be really exciting as we go forward, because it also leads into this. When you get an acre under management and you have a model like ours, there's these really strong network effects for potential, increase in average revenue per acre. So I think if you look at our last financials, we're about $5.50 average revenue per acre. But as we add more and more of these product offerings and bundlings in front of these customers, as well as some of the customers we buy are only doing maybe one thing when we acquire them, I think there's quite an opportunity to ramp revenue through the ecosystem.
So when you buy these local agronomists, you're buying their book of business, their expertise, but then you can also layer in other services to them and give them maybe some extra expertise and so forth that you can roll into them.
Yeah, exactly. And that's core to what we're doing. A lot of agronomists have become, they're really good at one or two different things. And they may not have an aptitude for doing more and more soil sampling collection, through their market. They may not have like a great analytical solution for yield data management. So there's always complementary things that I think we're finding as we meet more and more agronomists. And again, it's like they really are this trusted source. So imagine Dave, MacMillan from Toronto going to Des Moines, Iowa, and trying to convince 20 new farmers that we're the best thing since sliced bread. Versus there's already a linchpin advisor in this local market who's been trusted by that farmer for 30 years. And if he recommends something that he believes is valuable, his customer is going to say, sure, let's try it out. So we really think that this is like, it's a bit of a growth hack. Like everyone in ag tech is build a black box and burn, millions of dollars to try to build a market. We're saying we're building software for these businesses that are already cash flow positive. And you can buy them for, a really low multiple. And moving forward, we'll be able to make them more productive because of the digitization, but also just through efficiencies. Like agronomists today, I'll do their own accounting and invoicing. It's 5 hours a month that you can give them back to take on more customers. So it really is this sort of like land and expand model. And as I said, there's 20,000 of these agronomists across the United States and Canada.
All right.
So just kind of going into the customer journey a bit, in general, like where we might open up an account historically is, through collection. So a pain point is the cost of getting, highly kind of diversified, but high fidelity farm data. So it's very different from using satellite information. Like we're going out to fields and collecting this information. And then as we move down the value chain, people sort of, maybe they're recommended to get soil sampling for some reason or another. And then it's like, hey, what else can I do with this data? So as it starts to get into our system, we'll be able to provide more and more recommendations on, you can use this to manage your fertilizer better seed. If you give us your yield data, we can come up with more algorithms. And today we do have customers that are using us for a full farm management, which is, they're getting multiple data collection points a season. They're using us for recommendations on every input that they provide, whether it be their fertilizer, seed, and crop protection. And so I think if you think about like today, the average, farm user maybe is spending $400 or $450 an acre in operating costs, $20 an acre, or, not even 5% of their overall spend for independent analytical testing and advice is nothing. And I think in every other industry, you see a much larger percentage of kind of technology going into, your operating line. So we're kind of excited just about seeing these early, things with our customers. And if you can think about then like, hey, the network effects of as we get more and more acres under management, and if we have an ability one day to get to an average spend of $20 an acre, you have a really interesting business model with quite a bit of scale on it. And then just quickly on margin, as you can imagine, Martin, like when we're going out to fields and collecting data, it's still a very profitable exercise. It's just not as sexy as obviously, the tech multiple or the tech margin of when we're just ingesting data and providing an analysis from an algorithm. And I think that's what we're starting to see in the business. Like we're doing all the hard work on the collection side to gain the customer, and then they're starting to use our digital services, which is driving, improvement in our margin over time. And so this is kind of where we've kind of taken the company to. Like last year, we did about 2.8 million in sales, and we had just under, or about 600,000 unique paid acres under management. With all the acquisitions we've done to date, as well as growth from Q1 and a couple other contracts we've announced, we're at about $7.5 million run rate for this year, and it's only July 15th. So we still have basically 2 full quarters to go. And I think we're really excited about the progress we're making, especially under this new model of, again, rolling in the independent advisor. We have in our collective ecosystem almost 4 million acres. Now we're monetizing them a little bit differently because when we acquired Farmdog, our customer platform, was a completely, no monetization in their business model. And I'll walk through that in a minute of how we kind of plan to ramp that up. But, so for me, as we've sort of been building along here, I think we've really figured out like the customer need. It's taken us a couple of years to really listen to them. And I think strategically, we've really got a good idea of like where we want to go. And now it's just a symptom of execution.
With you talked about your run rate. What is the seasonality with your business and the farmers? Because obviously there's a growing season, but they are doing stuff in the meantime. But I can't imagine you're getting a lot of work in January.
Yeah. So, and I think that's as we can digitize the business more and figure out a bit more of a subscription model, I think we can sort of smooth it out. But for now, Q1 is a slower season. But we still had, we almost doubled, or we doubled our revenue in Q1. So we are starting to do more and more work. And like, as the company has expanded a little bit further south in our operating nodes, we're doing collection in Arkansas and Texas, in February. So I think as you kind of expand, we're able to, kill out a little bit more of the seasonality. But if you look at it, like typically Q2 and Q4 are our largest quarters, and Q3 is a little bit smaller than 2 and 4, and Q1 is usually quite a bit smaller. But what's interesting is the growth rates usually that we get in Q1 year over year kind of tend to carry through into Q2, 3, and 4 from a perspective of how much they're growing. So, we think that we had a really great Q1, and that probably, is symbolic of how we're going to do in the rest of the quarters this year.
How, my impression is you do sort of the commodity crop. I'm not the big like wheat and corn and that kind of a thing. Is there opportunities for you in like cash crops or like almonds in California or strawberries in Florida?
There is. It's just like the market size is so, like, from a dollar value, it's big, but it's just from an acre perspective, it's small. So we've really figured that we would focus on, cash crop, and we understand the recommendations of that business a lot more. I mean, we do some work in California when, pistachio growers want to know how much salination they have in their soil. We're happy to get there, and I'm sure there's a business that will at some point focus on expanding, but for now it's really like the US Midwest, Western Canada, kind of Ontario to PEI. And then, as we get out of the US Midwest, it's more that southern periphery of Texas, into where there's a lot of rice grown in Arkansas, Alabama. Those are really where we're focused on over the next little bit.
Sorry, just on my ignorance here, I used the word cash crop, and I think I may have been using it wrong. Can you define what sort of a cash crop is versus a non-cash crop?
We'd have to maybe get out the Encyclopedia Britannica, but I always think of cash crop as, the main like broad acre crop production of corn, soybean, wheat, canola here in Canada. Those would be the big ones.
Okay. All right. I thought cash crops, I thought those are like the commodity, you can buy futures on them, and the cash crops are, I got strawberries, who's going to give me cash for them?
Usually, I think colloquially now it's like there's the higher margin crop, which would be the other ones. Yeah.
All right.
So I guess just to sum up a bit of the strategy, it's like the way we see the world a bit now and how the landscape is in ag. It's like, there's 150 or so of these really large soil labs, and these things are doing 3 to 30 million in annual revenue. And we've bought one so far. Ours was smaller, more focused on soil health, a bit of a boutique, I'd say, but given the financial capital we have, we worked really well to sort of continue on with this ethos. And then there's maybe 20,000 agronomists. There's 15,000 that are sort of certified, and then another 5,000 that maybe don't have a designation but are still providing independent advice. And so collectively, these folks touch about 1 billion acres in Canada and the United States. And again, like rather than reinventing the wheel and trying to fight for a small pie, our belief is that we can systematically acquire, agronomy companies and soil labs and use that as a way to really drive our business forward. And maybe for every 20 agronomists, it's one soil lab. The labs themselves, they don't have to be next door to the agronomist. You can have kind of like a regional organization of labs. And the reason why this is so strategic, we think, is that for every dollar of soil that we collect, there's probably $1.50 in analytical testing to say, well, there's so much phosphorus or this how much zinc exists in the soil. So as we have a growing book of business of agronomists, and we are starting to collect more and more soil across North America, you now have secured supply to drive capacity through these labs that all can do more and more capacity without investments. None of them are running at full tilt. So I think it becomes this really exciting model where, again, soil labs, generally are 50% EBITDA businesses, and the agronomists are able to send them more and more soil. When you buy an agronomy company that isn't vertically integrated in with a lab, you can double their revenue pretty quickly just by securing the soil into a lab asset of your own. So I think it's a massive industry. It hasn't been consolidated at all. There's definitely no consolidation on the agronomy side. Like private equity is not buying $1 million, $2 million, individual owner operators. but that's what we love. Like, it's a culture thing. These people want to, they want to have a community. We're all working on this, basically message that, hey, farmer, we can help you by providing the best analytical information that's independent, that allows you to make the best decision to help grow a better crop on your farm. And again, like, there's been lots of great companies in Canada that have done this in other areas. And given the technology wrapper that sits on top of all this model with all the data, we think we're onto something that's quite exciting. And so just to touch on the multiples, like, these are a bunch of the businesses we've bought to date, and then another example of, one or two that we're kind of looking at. And as you can see, like, not paying much more than 2 times revenue at the highest. And even from an EBITDA standpoint, our general target is 2 to 3 times. For Stealth Ag, we paid a little bit more. One, it's got $500,000 of assets that we would have had to buy if we went into Iowa anyways. And then there's deep synergies of Stealth Ag as a large collection company that's not monetizing any of their product offering through a lab yet. So we believe that in short order, we'll be able to sort of start driving a lot of that opportunity in through our lab system. And yeah, I think, like, generally these deals are 50% cash, 50% equity. They're paid out over 3 years. So, if you're buying a $1 million business for $1 million, it's really only like $125,000 cash on signing. So we think there's quite a bit of leverage, and it's a very accretive model to get more and more acres under management, which at the end of the day, we think is the benchmark that Deveron should kind of trade on. I see there's a couple of questions on carbon, and maybe I can just touch on it really briefly here from a sustainability side. So we believe that carbon credits are going to be available in agriculture. It's just there's a little bit of work on the logistics side of making it happen. There are companies today like Indigo that are selling carbon credits to Shopify, Boston Consulting Group, JP Morgan Chase. We work with Indigo as almost like an exclusive collection partner. We're helping collect soil across multiple states for them, and then digitize the offering back so that they have a standard system, and they have auditable data that they can show, hey, this is where this the soil data is coming to show that this carbon is credible. And it's interesting, like, it's early days, right? Like, we're kind of seeing ourselves right now as a bit of a pick in the shovel in the gold rush. It's like all these companies are trying to build a carbon program for their farmers. None of them have logistics scale, and none of them have farm gate service to collect the data, and none of them can do it in a standardized protocol over multiple states. So they're coming to Deveron and saying, hey, we have this need. Can you help us? And it's leading to us, like, today we work with 2 of, I'd say, the 7 most important ag companies on earth that are doing carbon related programs. And I think as more and more of them start to realize how difficult the logistics of collecting this soil is, plus digitizing it, it's going to create a really big opportunity for Deveron. And as a derivative of this, like, as carbon credits become generally, I think, digested, there's no reason why a Canadian company might come to us and say, hey, we're looking for 1 million tons of carbon credits. Could you bring this out to your grower network? So, as we're learning, what the protocols are, there's no reason why our farmers wouldn't be willing to sell carbon to a buyer. So we think that there's lots of opportunity on that side as it goes forward. But for now, even from a market side, like, we did about $100,000 in collection support last year on the carbon side, and this year, it'll probably be close to $1 million. So there's a good amount of growth happening, and it's from some of the largest companies, in agriculture, which makes us think that the market might be quite a bit bigger than we initially thought.
All right.
So this is, I guess, like, how we're viewing our business model today. It's really our customer platform, Farmdog, in the middle, as a standardization of data, communication. Everything the company does will pass through Farmdog. And that allows us to quickly ramp on new customers from our side that we discover on the organic sales side, but also companies that we buy can quickly be onboarded into our ecosystem. Obviously, this limits succession, planning risk and customer churn when you buy a business, but it also creates a whole bunch of scale opportunity for these businesses that we acquire to focus more on growth. We're taking over a lot of their day-to-day data management, all these things that, like, is really holding back an agronomy group. And, as I said, we've already seen 50% year-over-year growth from our group in Texas. And now that we've bought a few more this year, we're hopeful that we'll be able to help them grow. And obviously this starts to continue over time. You've got a really powerful business model. And I'll just mention too, like, the future upside is like we're doing this from a data collection and data analytics standpoint. And as the company, I think continues to scale and we get more customers and more acres under management, you can imagine using this platform as a place to sell carbon credits through, as a place also to create aggregate data products. So, what do we do? Maybe some commodity trader wants to know, how many acres of canola were planted in middle of nowhere, Saskatchewan. As we get scale, those are potentially aggregate data products we'd be able to provide advice on. And then also just like from a financing side, farmland lending is like incredibly archaic. And if you want to go get a mortgage for farmland to buy, it's basically like, well, how many assets under management do you have? There's no like calculation of operational data. And so again, in our system, if we've got yield data, we've got as applied data, we know how well or not well certain farmers have been doing. Lenders may be interested in saying, look, if you provide yield data for us, we'll give you a beneficial interest rate. So I think we're just getting started on what the potential of all this information is at the aggregate. But for now, the more and more acres that we get on the system means the more and more eyeballs are looking at what we're doing. And I think that in general will be very valuable.
With your platform that you've created so forth, you're going to sort of consolidate the industry. Are there any key components that you're still missing at this point where you need to sort of fill in a slot, or is it just you've got a footprint in your key service offerings, and then you just need to expand those out?
Yeah, I think like if I think about it right now, the focus is really adding more pins in the map of agronomy operators. Like we really see the local relationship as a place for us to gain incredible credibility and power in the market. So, and that being said, though, like there's lots of technology companies that we're talking to that provide a product. For example, we sell soil moisture probes to our customers in Texas who use it for water management. And like right now, it's another thing we sell through our channel. But at scale, you can start thinking about, hey, that's an interesting product. And like, if we put that through, 45% of our network, it's another couple $1 million in, revenue. Like maybe we should be thinking about buying a company like that. And I think because generally ag tech companies are run to burn cash, you could probably turn their business models around pretty quickly as well. I don't think, the next 12 months, that's going to be something that we look at. We're really focused again on let's add more people at the ground level that are running these cash flow positive agronomy businesses. But it's not out of the realm of a possibility in the future to start integrating more technology in. But for now, Farmdog is doing everything it needs to do. We've got an engineering team, here based in Toronto that's adding, new features. We're focusing on ways to digest the data that we have before we worry about like bringing in more and more layers of information.
All right. And just circling back to your original business, the drone business, how important is that? Has that taken off? As you had kind of hoped it would, or like, obviously you've got this bigger opportunity and there's synergies there, but how is the drone business?
It's still complementary. I mean, there's lots of things that drones help with. Like specifically, we do a lot of work around crop protection recommendations, so fungicide. And the way to do that best is to have a high resolution remote sensing image. And you can't get that from satellite. So, around this time of the year, like you can't soil sample because the crop's up. So, we're out talking to customers about what they can use drone data for. I think the difference has really been I think when we first started the company, we thought it'd be direct to grower. Everybody would be buying this data because it's useful. But really, it's been other like drone companies that have come to us to like subcontract labor, or they need recommendation help on, hey, we have all this data, but the farmer's looking for the value add. And then the other side that's been doing clipping along is basically seed trial and chemical trial research. So large seed and chemical companies, again, they have a data need across multiple states and they need it all to be standardized and they don't want to have to deal with the logistics. So they're coming to Deveron to say, we have this, 2 or 3 year project. It's going to cover X today, Y tomorrow, and Z in year 3. And we want to leverage your network of people to scale up our data collection. But I mean, across last year, it was probably, 20% of our revenue. This year, as we grow and approaching, that $7 to $7.5 million, it might be, 10%. So it's important because it's something useful for our service, and the network is already deployed. So when they have a drone, it's fine, but it's not, it's nowhere near the driver of everything that we're doing today. It's just a complementary offering.
There's some questions in there about monocrops, and there's been a lot of criticism from the chemistry companies and farmers using, like, depleting the soil and so forth. I'm guessing with better data, it'll be easier for farms to go more green and use less pesticides and maybe use more sort of farm or earth-friendly sort of techniques or products and strategies and so forth.
Yeah, and I think this whole idea of digital innovation is like, the more and more information we have, the better we can learn to manage the ecosystem. And the whole, when we first started the company, we said, well, like, how the heck are you ever going to compete against Monsanto? And I think the thing is, it's just society is expecting this change is going to happen. And eventually, governments might say, you can only use so much pesticide a year, so you better use digital systems to understand where best to apply it. I don't think that's out of the realm of possibility to think about what could be happening. And I think this is where it goes back to also the importance of soil testing. Again, like, there's a movement in agriculture called the 4 R's, which is like right place, right time, right amount. And we really see ourselves as being complementary to this whole process. So in some places, more nitrogen is needed, but the grower should have a field record of kind of like the why. And I think that becomes a nice check and balance for society that thinks, oh, farmers are just applying fertilizer blindly. Like, it's not the case at all. They're trying to make a living. There's inefficiency in the industry that we believe data can help with. And, our lab partner in Canada on the analytical side, A&L Laboratories Canada, or A&L Canada Laboratories, who's also our joint venture partner in the United States and our soil investment. Like, they've got 30 years of soil data and research data that really suggests, like, the right amount of applications for certain things. And I think, again, like, if you focus on the system and looking at the data itself, rather than, well, Farmer Bill, this is how much fertilizer or crop protection we used last year, so let's just apply a little bit more, you're creating a better system for all. And it's really about benchmarking.
All right.
So this is Farmdog. So this, I mean, any of you could go to the iOS store or Android's Chrome store, and you can download it. So it's a free mobile application that we're starting to build onto. And Farmdog was started by now our VP product, Laurent Brish, who's an ex-McKinsey consultant, who's come over on our side as our VP product. But it was really this idea of, like, let's take field notation and digitize it. So in creating this easy to use application that when you're out in the farm, you can log information, we started to build, like, really interesting data sets. And from Deveron's perspective, Farmdog had built a really great customer base of 4,000 users and about 2 million acres under management. They just weren't monetizing it. And part of it is, like, it's a Southern California based company that was looking to raise venture capital to scale, and then COVID hit. So I sort of said to Laurent, like, Deveron needs a customer platform. You need to monetize your user base. So let's keep it free, but if we acquire it, our customers can migrate into Farmdog being their central system, and Farmdog users can now get access to Deveron's paid products and services. So, by the end of this fall, we'll be kind of launching, like, that first step of integration. We're really getting excited for it, because if you think about, like, our average revenue per acre right now, even if we can convert 10% of the Farmdog user base, we're creating, another $2 million in run rate. So, how quickly that's going to happen, like, we're not sure, because the engineering's not done. But I think it creates this really complementary, ecosystem where we can provide like one of the world's best in class mobile applications in agriculture and start to really build our other products and services off of it, which I think is going to help us scale. And again, it's a really agronomy focused app. And as we acquire agronomists, they love it. And even within the active user of Farmdog, at least 60% of them are independent agronomists, which potentially creates a really interesting pipeline for M&A in the future. So I'm quite excited about that, and kind of goes quickly into our team. Myself, public markets, and Scott Jackman, our VP of Sales, lives in Kansas City, Missouri. Kind of good old boy in the U.S., which you need for agriculture. And I'll just highlight Laurent again, who's our VP of Product, coming over from Farmdog, McKinsey. On the board side, Bill Linton is, and I think you mentioned this at the start, Martin. Bill's the ex-CFO of Rogers. So generally small cap companies don't really have, the greatest boards. So I feel pretty lucky to have a lot of really amazing people that are involved. And, Bill and his group invested last May, and then they were, 30% of our financing in December. Bill's also on the board of the Toronto Stock Exchange and Empire, which is the owner of Sobeys. And Bill spends every day thinking about how we can productize this company and make it truly valuable and transformational. People on the call may know Roger Dent, who's been a prominent guy in microcaps in Canada. And then lastly, Joelle Faulkner just joined our board. So Joelle runs a $700 million private equity agriculture fund called Area One. She's a Rhodes Scholar and has a huge network of farmers in Canada on her platform. So I think, we're doing the right things. We're trying to grow, and we got some really smart people at the board level that are keeping us honest in terms of like building a technology company first and building things that are really useful for agriculture. I think people always care about the cap structure. So we got about 73 million shares out, 89 fully diluted, a few warrants left from our financing that we did, obviously, and they're all in the money, which is great. And most of the options are with management. So it's a pretty tightly held company. Even the 60% retail is, mostly 7 or 8, kind of high net worth brokers in Toronto and Vancouver that have invested in almost every round that we've done since we've been public. Management owns actually 23% now when you include the warrants that we exercised. And Greencastle is a small merchant bank on the TSX, so that's quite long-sighted in where we're going. So that's, I guess, a bit of an overview of what we're doing at Deveron and what we're trying to do, and happy to go through any other questions that you've got handy there.